So let's kick off formally. Welcome one and all. I know there's many of you from the US as well as from Europe and some late stayer-uppers in the Asia Pacific area, region, where obviously I'm speaking from now. As I said, wherever you are, delighted that you could make it today. I know many of you are new to Hawkeye, some of you are more experienced, and what matters is, to me, is that everybody walks away from this session with something that's going to be useful, something that's going to, a question that needs answered, or perhaps just some clarity or confirmation that what you're doing in your own trading is along the right line. So that's my mission for today. Remember, it's your session, so the more you participate, firstly, the more you're likely to get from me, and secondly, of course, the more likely you are to have those questions answered that might help you on your particular journey. So we will kick things off just by saying a couple of things first, a couple of important messages as the saying goes. First of all, obviously we are talking live markets, and so you've got to bear in mind that what we talk about here is for educational purposes only, that I can't make the decision for you, nor recommend specifically that you enter or exit any particular trade personally on a session like this. So please take that into account. Anything you hear is invariably my opinion only, not necessarily that of Hawkeye Traders LLC, it's called. And so again, bear that in mind. And also, what I would say is you're at varied levels of experience, you're trading different things. I'll try to cover as many bases as I can, though obviously it's difficult on a session like this. I have got some exciting news towards the back end of the session about a couple of things that I'm running specifically that might help particular instrument traders. This is more generalist, to introduce you to Hawkeye itself, and etc., etc. So that's where we're starting from today. Again, I've got a couple of questions, and if you could please participate in these, it's always useful for me to know. So first of all is, what markets are you trading? You can tick as many or as few as you like. There is an assumption that you are trading, or at least trading on a virtual or demo basis, and so if you can tick the ones that are appropriate to you, that would be sensational. Which I'm just going to launch now. Sorry, I forgot to press the launch button. There we go. And just to see where you're all at and what you're trading. So just tick the ones which are appropriate. And what that means is I can just make sure that everybody gets something. Thanks to all who have participated so far. Over half of you have, which is fantastic at this early stage in the session. Okay, another 5 seconds. Okay, we've got a fairly broad mix. That's great. 2/3 of you voted. Thank you so much. Yeah, we've got a wide range. We've got quite a few forex traders and a lot of options traders as well. A few commodity traders. You've had an interesting week, and yep, that's great. One more question to ask. I know many of you have heard me before. Some of you have not come across Hawkeye before, not using it now. Some of you have bought the volume modules, and some of you have got the more professional packages and the trader packages, etc., etc. So again, in terms of me being able to explain what's going on for those of you who are less experienced, if there is a fair few of you, then I can, if you like, show you a few of the things that Hawkeye does and why. Give you some real examples of the why behind Hawkeye. Okay, thanks again for your participation. That's really appreciated, guys. Okay, I'll close that down there. Again, we've got a fairly wide mix. Some of you are trader or forex packages, others have dipped your toes into the volume package, and a fair number haven't traded Hawkeye at all. That's great. So that's really useful. Now, the way we're going to, I'll tell you just a little bit about me, although I don't want to spend too much time on that because it's not about me, it's about you. And we'll bounce through that pretty quickly, just give you an introduction to Hawkeye, and then we'll start to look at the markets. What I normally do is get the bigger picture first, and then we'll start to look at some individual stocks. We'll have a look at the ES before the market opens, see where it's at now. I'll look at the futures just before we came on air, and they are positive. They've moved slowly positive during the from a fairly neutral position around the Asian sessions today. They've just moved slightly positive after the European Open, along with oil, of course. So we will just give you a little bit of information about me in case you've not heard me before. So 20 years a trader, and of that 10 years a consultant, coach and teacher. And because of that, the teaching side of things, I'm passionate about seeing others get results. It was really that passion that came across in a presentation that I was given at the Australian Technical Analysis Association meeting here in Perth, Western Australia, some nearly 3 years ago now, where Nigel Hawkes, who's the founder of Hawkeye, developed the software and the indicators around Hawkeye, came across me and said, Mike, we really want to add an options arm to what we're doing already in equities, FX and futures. So I said, well, yeah, look, that's fine, but I want to test Hawkeye out before I start jumping in and promoting it and using it, of course. And so that process has took place. I quite liked it from the point of view of a few things. First of all, it just helped me clarify a few things. One of the mistakes that I made in my early years of trading, and certainly probably actually not that long ago in terms of years, was being a fairly aggressive trader, I guess, that there was trades which I really shouldn't have entered. And Hawkeye managed to just give me a little bit of a prod to keep me out of the trades I shouldn't have been in. Also developed some idiosyncrasies around using Hawkeye for options trading, which have served me well on the exits front. And look, in my 10 years as a coach, probably one of the things that I come across time and time again is people nail entries, okay? It's not that hard once you've got a system, as long as you actually follow it, which seems to be quite difficult for a lot of people. It's not actually hard to enter, it's what happens next that really either causes the damage or creates the results you want. So Hawkeye enabled me to just get a little tighter on that as well. So that's me and Hawkeye. Now what about Hawkeye? This is Nigel Hawkes, it's not me that you see there, and really he spent a number of years, like most of us, donating to the market in his early times. Made it his mission to go and find something that worked, and so he looked at just about everything, came across volume spread analysis, and which really is all about looking at the leading indicator, which is volume. Recognize that professional traders used that to confirm whether supply or demand is the boss, and whether it's buying or selling volume. And really the advantage or the trading edge, which just to give you a little bit of definition, you can write this down if you want. A trading edge is really something that gives you an advantage over the market participants. Then one of the things that Hawkeye does, and I'll show you this in a few examples when we look at some charts, is that it often indicates a potential movement prior to a trend happening. So it's a plugin, so it plugs into multiple platforms, including TradeStation, NinjaTraders, which is what I use. Many people use something like Thinkorswim or Options Express, or etc., for their equities and options, and sometimes futures, I guess, and interactive brokers, and use something like NinjaTraders as a charting platform, plug in Hawkeye, and then buy the data feeds they want, or just use end-of-day data if they're trading longer term, and use it from that. Also plugs into MT4 for your forex if you choose to. And what Nigel's done over the years is developed a series of indicators. I'm going to show you a few of them today. I might show you the scanning tool if we get a chance. One of the guiding principles is that we use 3 time frames for entry decision making and use the fastest of those for exit decision making, usually in a ratio of 1 to 4. So if we were to trade FX, we'd be trading a 30-minute, 60-minute, 120 chart, for example, as a time frame combination. We can talk a little bit later on about how we choose time frames, etc., if that's useful. And you can get more about Hawkeye Traders, Hawkeye software at hawkeyetraders.com. So that's the Hawkeye principles. So as I go through this, we'll have a look at some big picture stuff to start with. And I'll start to show you some of what Hawkeye shows us as we go through. I'll stop intermittently to answer questions. Let's just briefly what's happening. The Fed have obviously not intervened at all in the markets directly since December. At one stage there during January, it looked as though they weren't going to intervene for the rest of the year. But now the Fed fund futures are really pricing at least one rate rise for at some time during the year as a minimum. It was down to about 70% chance during January. Obviously the non-farm payrolls data that came out last week was very supportive of a potential rate rise, and that's what changed the feel of things. Oil really has dictated both equity and currency movements pretty significantly really since the turn of the year. We had a substantial move up in the last 10 days or so. $35 a barrel was pretty crucial for oil. Smashed through that. Lots of short covering came, and we had another 5% move up just to finish that off. A little bit of a pullback yesterday, but now we're up again, which is probably helping drive the futures higher. Earnings season came in slightly better than expected. Obviously that's primarily mostly done now, and so we're back to looking at data and oil as the two main drivers. China has obviously been on market minds for some considerable time, and really has been fluctuating between doom and gloom, disaster in terms of investor sentiment towards China, and well, actually they might be okay. So really the data is softer, there's no doubt about that, but the PBOC have come out quite clearly in the last week and said, look, we see a reasonably soft landing for China. We're still expecting a GDP between 6.5 and 7% for the next 12 months. And there's no reason not to believe that. The data is supporting that if you look at it closely and get beyond the noise of market chit-chat. Perhaps a little calm in China. There were three things already in the market in January. If I just flick to the S&P 500 chart, which created this major drop and a retest of 1800 on the S&P 500, and that was potential recession and certainly a deflationary environment. What was happening in China and what was happening in commodities, particularly oil. Now, if we look at what's happened since then and where it is now, then oil certainly, as most people would say, has found a bottom for now, and indeed it has shot up considerably over the last week or so. The data isn't supporting a move into any recessionary state in the US, so that fear seems to have been allayed, and there does seem to be some stability in China. There's no obvious further depreciation of the yuan coming on, and that's really what's driven the markets up to really what is a crucial psychological level of around about 2000 on the S&P 500. So that's really where the markets are as a whole, and so everything should be seen in that context. If we look at the S&P 500 chart that we see in front of us, I'll just briefly, these dots here are Hawkeye trend dots. There's 60-something points in the algorithm that go to make up these, but they're either green trend, which is uptrend, red trend, which is downtrend, and of course white being congestion. And you'll see that the S&P 500 is clearly an uptrend now on the daily chart. On the weekly chart, If we look at the weekly chart, then we do see that we're still actually in downtrend, but that downtrend is pointing up. There's that W shape, double bottom type of pattern formation, and here's this level of 2000, which, as you can see there, is pretty clearly a crucial line in the sun. We snuck above it, and then we dropped off 22 points or so yesterday. And but really 1865, whoop, in the short term, 1965 on the downside, and 2000 is the short-term range we think it may trade in, but 2000 is the level to break if we are going to see any further move higher, and much of that is going to be dependent on what happens to oil, we suspect. So that's really where it is. We also look at the VIX, and one of the reasons I'm showing you both of these is I'm just going to, if we get a chance, I'm just going to go through potentially a system for strategy selection. Now, this may also have some relevance to looking at whether to trade equities or not, and the principles should be, I would suggest, should be part of your FX or futures decision making in terms of whether what sort of time frames you feel are appropriate. Now, one of the things that Hawkeye has is if you move to trading on ticks, which again are a great indicator of how much activity and how much volume is going through, then Hawkeye does have a couple of tools both in the FX and in the intraday equities called the Gearbox, which I was speaking to Nigel yesterday and saying that we should showcase this sometime, so we're actually going to run a session in about 2 weeks' time specifically on intraday trading for FX and equities using the Gearbox. So just keep your eyes open for that. It's going to be a free session, no sell from that at all. It's just going to be for your information. So just wanted to make you aware of that. We look at the VIX as well. You see the VIX, which measures implied volatility on options trading on the CBOE. We'll see that we're in downtrend on the VIX. There's usually an inverse relationship between this and the S&P 500, so that isn't really surprising. Often the VIX leads, and we can use the combination of the VIX and the S&P 500 to decide how aggressive we should be, perhaps whether we should position size normally or whether we need to reduce our position size. And certainly that's one thing that we've done in the Hawkeye options portfolio that is like a trade alert service, is that we have been primarily long the market over the last couple of weeks, very reluctant to go short at all, and but the positions that we have opened have been low in terms of contract size. So and this is based on really a couple of things. It's based on the fact that we haven't broken 2,000 yet. That was obviously going to be a key line in the sand on the S&P 500. We are still in fairly fragile market conditions, and we are very dependent on oil. And it's really over the last 6 days that the VIX has entered downtrend. But look at the currency markets. Always suggest that we look, whatever time frames you're trading, always look at the longer term daily picture. So let's just look at the Euro USD. We're back into, we talked last week when we met about the moving back within this range. We're stuck in this range really for the early part of the year between about 107.50 on the downside and really 110 on the upside. You can see we're in congestion there. There's pivot highs and pivot lows which are forming a support and a resistance level. So really over the last sort of couple of weeks we've moved back into this range. We retested 108 on the downside, and now we're comfortably in this range now. So really keep a tight eye, even if you're trading relatively short time frames on the Euro USD. Keep an eye on those key lines in the sand there as well. We'll have a look at that live in a moment. Okay, and I'm just going to have a quick look at questions, and then we'll have a look at Okay. Is the sound on? Yes, the sound's on. How do you determine the market harmony and using the 1, 2, 4 time frame? Can this change every day? No, that 1, 2, 4 is based on ratios from GAN. That's been certainly one of the things that Nigel did, was he combined the idea of some of those ratios along with the volume spread analysis. He was using that. That was a pretty key principle. Now, what we see with, or one of the gearbox, the Hawkeye gearbox attributes, is that because it works on tick charts, what the gearbox does is it tells you what tick charts to have a look at. So it determines what your three, if you like, time frames or tick frames are the appropriate ones to look at, and that will tell you exactly the charts to look at. So that's quite a powerful tool if you're trading ticks. So that doesn't change every day. Just for your reference, for equities we tend to use daily, monthly, weekly. For options we tend to use the 1 day, 2 day and week chart. And for anything intraday we tend to use the slower, the 1, 2, 4 time frame. So if we used 60 minutes as our fastest time frame, we trade a 120 minute and a 240 as our other two time frames. And if we're trading 15 minutes, we trade a 15, 30, 60, which we'll have a look at the ES in a second. Stanley, I did actually see the email today. I do apologize for, I'm not sure why I missed it. They actually flicked it through to me. I will get in touch with the technicians and find out why Fatman isn't showing on your MT4 to see if anything can be done. Right, okay, so let's have a look at some live stuff. If we can get it rocking and rolling. If you just give me a second. So I'll show you the trade that I put up for, I do a trading tip of the day, which is a free service, really for options, but this would suit for equities, and I'll show you the Hawkeye behind it, if you like, the Hawkeye reasons behind it. So really what Hawkeye is about is it's XLU we like at the moment. We've had a couple of, we actually traded this going up here. But what we see with Hawkeye, so I've already explained the trend dots. We've also got volume here. If it's buying volume, it's green. If it's selling volume, it's red. If it's neutral volume, it's white. We'll talk about the heat map later. But really that's a momentum type of indicator. But we see here that as we're coming out of congestion, we start to get some green volume in before we moved into uptrend. Wasn't particularly positive. Again, we've got the same picture. So we're looking for green trend, green volume, green heat map as our potential entry. Now the reason we like XLU is for a continuation of an uptrend. So we had this previous pivot high of 47.50. We smashed through that yesterday at 47.84. If we look at the longer term charts, here's a 2-day. You can see it on there again. We've got green volume on there, so we've got green volume on all 3 time frames. And we've got green trend. There's again the break of the pivot high. But the important thing is really remember that that volume is leading. So again, if we look at the weekly chart, you'll see the green volume came in. Now the reason I've extended this weekly chart is so you can see where a profit target might be. So that's around, let's give you the exact figure on that. So that's around 49.45. So we may well enter a long call on that with maybe a $49 call for April or May, with probably a $49 profit target on the underline, which should scoop us up a nice a nice 80% plus on the cost of the option. So that's one to look for. Certainly, the other way we could play this is a longer term trade. So perhaps a longer term bulk call out to January next year, and then subsequently sell calls over the top. We'll probably delay write it for now, and then look to sell a call as soon as it stops going up, and then subsequently on a weekly or monthly basis. So that's just one example of how Hawkeye works. Now what we're going to do with this is quickly change to the ES. Okay, we'll put it on to a 15, 30 and 60. Okay, now I've done that, I'll put you back on so here we go. Just make sure this is live data. Okay, it should click in pretty soon in terms of but you'll see what's happened is, as I said before, we're pretty flat in Asia, but we've had a really over the last few hours, if we look at the 60-minute chart, we've had a nice rise up in the last 4 hours, which sort of fits with European Open. We've just come off the boil a little bit there. I'm not sure why this isn't moving, but that's moved from uptrend back into congestion on the daily chart. So just a little bit of a pre-market pullback. We've got about 2 or 3 minutes till the equity market's open. So in terms of a trade setup, we have got, we need to see green volume on the hourly. We haven't got that, so we'll see what that looks like as we move half an hour into the trading day. Should see it quite choppy initially, which is the norm. If we look at Euro USD, see where that is right now, same time frames. Interesting move on the Euro USD. If we look at across the 3 time frames, well, really we're in downtrend on all 3 time frames. We look as though we're testing a pivot low here, which is sort of which could be an important level. So 109.45 would probably send this back to red volume, and something that we might be interested in having a look at trading short. We've got as I said, we've got selling volume on 2 of the 3 time frames, so we would just be waiting for the 15-minute to catch up, and that would happen if it broke that 109.45. Probably wouldn't trade in the first 15 minutes of the equity market's opening, but that's where that is at the moment. Questions. Let's just have a quick look at questions. For day trade, which time frames do you suggest for the ES? Well, look, I don't particularly like trading this tighter time frames. I prefer, if I was trading the ES, it would probably be a fastest time frame would probably be 30 minutes as a general rule, so 30, 60, 120 would be my preference. Some of your time frame choice may be dependent on, if you're trading intraday, may be dependent on the underlying market and what's happening. Certainly, if markets are choppy, which they have a tendency to be of late, then tighter time frames tend to work a little better than daily time frames at the moment, simply because we're getting thrown all over the place by what's happening with oil price. Alan, I'm not sure why you can't hear anything. There's certainly no mute button on this side for anybody. If some of you, the rest of you, could let me know what you could. Yep, okay, cheers Ron, thanks for the feedback. So it may be a local issue, Alan, sorry. but you're not likely to hear that perhaps. What are the red and green fences? Okay, Mark, yeah, that's a great point. We can talk through a few other things that we see here. So this is called the Hawkeye stop. So essentially is a cross and a line across. Now the cross is the stop. So if you get a close below, or in this case above, that cross, then would be out. Or if you get an intraday touch, sorry, an interperiod touch of the crash barrier, which is the line that you see across. So if we were, let's say we entered this on the 30-minute chart, enter on this bar here, it hasn't triggered a stop yet. It didn't close below that, but it might have triggered a stop there if it hit that crash barrier. Usually would hit the crash barrier, we put the crash barrier into your trading system and then use the Hawkeye stop subsequently. So yeah, we're probably in at 110 on there and out at about 109.90. Potentially, if that hadn't triggered, actually didn't close on that bar. So I have to have a closer look at that. Would still be in this, obviously. If we sort of got in after this wide bar, this is a wide bar. We never enter unless it moves below that, below the low of that. So we look for a close on a bar that was below this level here. So we'd be interested at this stage, obviously. From what I said before, let's just reload that. Thanks, Charles. So yeah, so those are stops. Those are stops to answer your question, Mark. There's a few different ways we can use exits. We can for options trading, I tend to use the trend dot. So if it crosses it, if for example we're trading a put option on this, then really we'll be out significant. It didn't close below the trend dot until here, so we'll be out on this bar here. If we traded the same time frame. The other thing we can use is ATR levels. Absolutely, Mark. You can use whatever you like. I'll just show you the ATR levels in a little while, just so you've got clarity on that. Let's just flick back to the ES and just see how things are doing. Okay, so we're still in congestion on that. Let's just check how the markets have opened. If we just have a quick look. Open slightly higher, S&P 500 up 0.44. Doesn't quite reverse where we were our yesterday's losses, but it's certainly better than the close yesterday. So we're about 12 points off 2,000. The Dow's up about 1/3 of 1%. Nasdaq's up 1/4% again, but the Russell's appears to be not doing particularly well. If we have a look, financials got clattered yesterday. Still not performing particularly well. Let's have a look at our XLU, which is the one we pointed out before. Up 10, so that's up a little bit. We also had a look at XLV, were our pick of the day yesterday, which is the healthcare ETF. We'll put the chart up for that in a moment. I'll show you why. Up 21, so that's worth keeping an eye on. Let's just do that. Let's just okay. So I'm just moving your screen out of the way. I'm sorry, I've got multiple things to contend with here, so I'll just change this to daily. I'll just show you the daily chart for now. Really, with XLV, our entry criteria is a break at this pivot. So we need to see it really break 68 or 68.10. I think it's in the options portfolio as a trade alert. So yesterday, we're not getting live data on this. So yesterday we saw that drop off down to 67.12. So it's picked up a little bit, picked up about. So it's unlikely to be triggered tonight, but we will have a look later on or today in US time. So it's up about 14 cents at the moment. with the overall market just dropping back a little bit, only up 0.3% on the S&P 500 right now. Let's have a look at our Euro USD, see what's going on. Let's look at our 15-minute chart. Yeah, we're still not broken down below that pivot low yet on the 15-minute. Let's have a look at it. Yes. This is hardly a compelling story at all, really. Look, if you want me to have a look at any stocks and give you sort of what Hawkeye is telling us, perhaps ones that you're in, we can look at what the exit may be on them, or any options positions, or even any FX positions. We can certainly do that. Let's just have a few questions coming through. Yes, we can look at GB. We can look at GBP Australian dollar. Okay, so there we go. We've got on the 50-minute chart. That's an interesting chart. And look, this is a potential Hawkeye entry on this currency pairing on these time frames. There's your series of pivot lows. 1, 2, 3 pivot lows are around about that. This bar, we haven't broken it. We had a test of it, but we haven't broken through it yet. So I would wait for a break of 189.70. We've got selling volume here, selling volume here, and selling volume here. If we get the break below this level, it suggests a continuation of that downtrend with Hawkeye. So if you're in already, you've done particularly well. If it doesn't break this bar, you might want to take it off and then subsequently look to re-entry if it does break subsequently later. But that's a very nice short trade, which we would have been in around about 3 and a bit hours ago, I guess. So if we look at just before, yeah, we certainly would have been in on this bar here, even though we had this little jump up here. So this bar here, once it broke beneath that wide bar, would be in here. Let me just show you the ATR and show you how that works. So all the Hawkeye indicators, this and the wide bar are my two favorites, I must admit. Wide bar, wide bar, wide bar. No, we're looking for is ATR. Let's just make it a 14 period ATR. Oops, no, 124, 14. So this is how the ATR level works. So let's say we entered on this bar here. There would be our initial stop. Okay, so it didn't close above that. And then as it broke ATR2, we'd be looking for a close below 1. As it hit ATR3, if it closed above, if it had an intraday touch of 1, we'd be out. But if it closed above 2, we might be out as well. So we might have been out on this bar here. So picked up around 30 pips for that trade, if we're using the ATR levels as a stop. GLD, yeah, look, GLD, I did have a chart on that. We can look at the daily for sure. Looking pretty tasty, GLD. Been an uptrend for a considerable number of days. If we look, I'll just put the weekly chart up. If you're not in this already, then really 122 looks like the confirmation of a continuation of uptrend. Be prepared to be chopped around a little bit, but we've got, if we use the Hawkeye trend dot, then this would have been a nice options trade. You see, it didn't close below that level at all. We wouldn't have got in on this bar because this is a wide bar, and so we would have waited 4 bars. Then there's no entry there at all. Whoops. But we may have been interested once it moved back up again. So say we're in it on this bar here, then again we'd be prepared to be chopped around a bit. If we used ATR levels, once it's broken 2, can actually close above 2 ATR, close right on 2 ATR, would be looking for a close of 1. So if you're in it already, then maybe a 119.75 ATR is where you would get out if it closed below that. If you're not in it already, then really around that 122.67 looks pretty good for an entry on that. If we just look at what GLD is doing right here, right now. If you've been in that for a while, that's a pretty special trade. Down 145. Okay, so we're actually down. We're actually down below that 119.42 mark. But we would see how the day pans out really with GLD. So that's really what I would suggest with GLD is if you're not in it already, wait till it breaks 122. USO, the oil ETF. Look, there's the uptrend we see 3 bars ago. Again, look what Hawkeye did. There's the green volume coming in again prior to, so if we're looking at oil thinking, whoa, this could be a trade we can, if you want to trade the option or the ETF, then we could look at this and we could say, well, look, now's the time to get ready to go. And so we would have been in on this bar here. As we see, we've got green trend, green buying volume, green heat map. We're in green trend on the, on the 30 minute. We'll change this to a 2-day. Give me a second. What do I think about oil? We'll come back to that in a moment. Yeah, so there's the 2-day chart. So we've had green volume in for the last 3 days. On the weekly, again, we've got green volume coming in. We've got the trend dots. This is for the 3rd time frame. We're not so interested in the trend color itself, but we want to see the trend dots. If it is in downtrend, we want to see the trend dots flattening like you see there. So that really would have been an entry here. Obviously, we had that pullback yesterday. And of course, we've got the all inventory numbers out in around about 45 minutes time, which may well end up dictating where the markets go for the rest of this. One of the nice things about running this on a Wednesday, particularly when the market seems so tied to oil. We've got oil, we've got USO up 22, so it's up at 987 at the moment. So we're moving back towards that $10 mark on the ETF. Were you in that long-term, Joe? US dollar, Japanese yen, jumping around a bit, but that's all good. Yes, you can. The volume indicator, you can buy. It is cheaper than you see on the site. If you buy it via this webinar, I'll give you a link later. What that means is you get the volume indicator, the wide bar, and the pivots. And then you can put your own trend, whatever you use for a trend line, be it a 12 EMA or a 7 EMA. Oops. I'll have a 60-minute on that. Looking pretty bullish on the US Japanese yen. Again, if you're in it already, let me just change that to an open, high, low, close, just for neatness. Sorry, I do know that as I'm doing this that sometimes the bandwidth suffers a little bit. So here's a great example of a wide bar. So we'd see this wide bar. Note how the trend hasn't changed on the wide bar, but we did get green volume coming in, suggesting that there was a potential change in trend coming along right from this point here. We saw this wide bar here. We wouldn't have got in unless we saw a break above that, so we'd have been in on this bar here. That would have tied in very nicely. So that, what's that? That's 1, 2, 3, 4, 5, 6 bars ago, and you're always a bit brave if you're entering a currency trade, a short-term currency trade before the US equity market opens, of course. But it would have fit from a Hawkeye entry. There's the green volume on the 60-minute. And obviously, again, we've got green volume on the 30-minute for quite a few bars beforehand, and well into that end of that downtrend. So if you're long that, then you might be tightening a stop here, I guess. If we use this as our ATR entry, then really at this stage we'd be looking as an exit if it broke back below 112.70, 112.80. We might take ourselves out of that. The Hawkeye stop is obviously down, right down here at 112.51. So if you'd rather use that, that's fine. And see where it goes from there. Hope that's useful. Okay, Vixie, what time frames would you like? On that? Carl, I think it was that asked to have a look at that. Well, what is the pivot dot based on? It's high, low, close of previous groups of bars. Yes, it is. If it's really to do with the pivot won't show until the following bars created. So there's a day lag in the pivots. So it's really to do with what happens to the next bar. If we look at there's a great presentation that Nigel does called 6 Ways a Market Moves, and usually a pivot indicates a potential trend pause or the potential for a trend pause, which is why a break of a pivot is either up or down is often seen as a continuation. Okay. All seems to be holding it. So here's the. Pause the screen. Apologies. Let me unpause that for a second. So here's the VIXI, and you'll see it's in downtrend, but it's coming towards the end of this. This is from memory. It's the ProShares short-term futures, I think, on the VIX. So you can see it's in downtrend, which is not surprising on the daily chart. If we're in an option on this, we may well be watching this for a potential close. If there's a last hour close above 15.10, I'll be ripping it off and saying thank you very much for the profit memories. It's only up 4 at the moment, so it's not exactly breaking any records right now. I trust that's useful, Carl. Not sure, Roger. I will signals from your appear in the Ninja Trader data box for use of Bloodhound. No, I'm not sure. They do appear in Market Analyzer, which is obviously what we use for scanning, which we'll see if we have time to do later on. Yes, you can have data feeds from Interactive Brokers, so live data feeds into your Ninja from Interactive Brokers, from Thinkorswim, I think, from a number of other data sources, as well as obviously the ones you can buy end of days free from Kinetech, and then you can buy obviously into the exchanges you want if you haven't got something that you can. But there's a lot of IB, a lot of Interactive Brokers traders use Ninja and put the data feed into Ninja to use the Hawkeye indicators on it. It has all the, no there isn't a VWAP indicator, but all the proprietary indicators are on here. I'll just see if, no, it's not on here. There are a number of Hawkeye KISS, which I'll have to open a new chart for. Apologies. Hawkeye KISS shows the, let's just remove that because it's not going to work. Hawkeye KISS shows the decliners versus advancers and how they're changing. That's a useful Hawkeye tool. The Hawkeye grabber is really just like the ATR, except it's user defined, so it doesn't use the ATR. You can actually put in whatever you want. The zones, they run regular webinars on that, so keep your eyes out for those. The volume radar, and just to answer a couple of questions, this is the volume radar, and you see these dots here, and they're blue for low volume, red for extremely high volume, which you would tend to stay away from, and red if there's yellow if there's higher than normal volume. So yellow is usually another nice tick to put in your books. Red would usually would be a wait till the next bar sort of signal. Hold on, William, I will answer that for you. Let's just, while I'm having a look at that, let's just have a look at what the ES is doing again. Let's look on the 15-minute. See, there we see the standard wide bar that we always see on, invariably see on open. So we hit a low, we've sort of slightly moved off that. That was, and now we're just starting to get a bit of stability in terms of direction. We've still got oil, USO up to 1988, hasn't broken $10 yet. Still got gold, GLD down 142. Nasdaq has actually turned negative. Nasdaq's having a dreadful time. I mean, the FANGs are getting walloped. So Facebook, Amazon, Netflix, and Google. S&P 500 still up 0.34. NVIDIA is another one that's in a little bit of strife at the minute. We'll have a look at that because we did like NVIDIA before the latest drop-off. If we have a look at NVDA, it might be worth looking at a short trade on that perhaps. Let's do on the daily. Is it a short trend? No, it's still in uptrend officially but you see how that trend's fading fast. Now we would be actually exiting that if it. We are long in this in the options portfolio. We'll be exiting that if it breaks 3150. Now, if it's 3150 last hour, it's actually below that right at this stage, 3137. So that might be a potential exit. But if we look at, let's see. Let's just have a look at the FANGs. Let's see how they're doing. See if it's those. Yeah, look, Amazon's down another 1.36%. Facebook's down another 0.31%. That's really in line with market. But you'll see how these have been crucified from where they were. Right. Let's just have a quick scan for you. So we're about half an hour from all inventories data, which, as I said, I think may well dictate the rest of the session. Okay, so I'm on the Hawkeye site now. So if you go to About Us, William, just click on Contact Us, and it should have the tech support. I thought it had the phone number on there. It doesn't. Click support at hawkeyetraders.com, fill in one of those, give them your phone number. Oh, there's the number. Oh, it's message only. But they get back pretty quickly, particularly now. Oh, okay, yeah. for sure. The trading tips I mentioned before, if you go to Hawkeye Traders /options, there's Mike's trading tips, and there's XLU for today. There's the previous ones. You can have a look at those. GLW we absolutely shot through. Let's just see what I'll show you a GLW chart. This was from a couple of days ago. Let's just get rid of that ATR, I think. Okay, so there's GLW. We liked it. We liked it here for a break of this pivot. Did this wide bar thing, and then they did this yesterday. Actually, Facebook's coming back up a little bit. Pretty close to neutral now. GLW, what's GLW doing? Up 27, up to 1930. So up around here. If you're not in GLW at the minute, there's a 1960, so you wouldn't get in unless it breaks that wide bar high. Do I see the ES below 2000 today? Well, look, I mean, as I said, I suspect the all inventory numbers are going to be pretty crucial in terms of the market direction. If we get a lesser build than is expected, any short covering, any shorts that are left in oil may well sort of scamper to the close. So it might be that drives the market back to 2000. Whether it'll break it or not remains to be seen. Let's have a look at XLU, Ron, since you've highlighted it as doing okay so far. Yeah, up 26, up to 48.10. XLU is looking pretty tasty. I'll put that XLU chart up again just to show you the why behind that. There was that move yesterday. We're now over 48.10. Really looking at a weekly chart. In fact, let's take it to a monthly so we can see it even better. Stick a monthly chart on this one. That should come up in a moment. But you'll see if we go back to around the back end of 2015, so 2014, there was that $50 high on XLU. That really, there's not a lot of, even if we look at a weekly chart, there's no obvious lines in the sand between now and then, between where we are now and there's that $50, close to $50. So again, there's the end of 2014. So a nice potential move up, and so I agree. Yeah, I agree, Ron. It is looking pretty strong. It's just it will be interesting to see. Well, I've got the Hawkeye site open. We can check on GM as well, because GM were another one that we liked on March the 4th, and you'll see why that was. Put a GM chart up. So we liked it on the break of this pivot. So we obviously had a pullback yesterday, along with all of the Dow transports really. I mean, what I saw yesterday was really those stocks that had done particularly well got pretty well hammered on the back of some profit taken, just because people were anxious it hadn't broken 2,000 yet. So we're seeing it back up at 30.42. So up 0.4% at the moment. So if we had entered at this point here, which is where we're looking at, we'd still be in this trade. We may well have actually set a profit target on this. It's one of the things we often do. There's a pivot that it didn't break. So what I would tend to do is put it a percent below any pivot like that, which could be obvious resistance. So particularly when it failed on this bar here, I probably would have had a profit target for the next session, just saying that, look, if it dropped at any stage below, that would be below 31.68, we'll rip it off. So in options terms, that would have been a great trade. We entered on this on the break of those pivot highs. So we're up probably around about $1.20 on the underlying share, which in option terms is 60 cents on an option, which would cost you 90 cents. So you're looking at around about 75% profit. So have a look at these videos. You can sort of subscribe to that, and you'll get. Here we actually considered XLU at the end of Feb as well. Just while we're here, if we go back to HawkeyeTraders.com, click on store. So those are the Hawkeye packages. For those of you who are not familiar, there's the volume module, there's a standard package, and there's a professional package, depending on what you want to trade. Obviously this is just a starter package. I'm actually going to give you the chance to do this for $97, not $360 later on in the session. So keep your eyes peeled for that link. It's obviously on for these sessions only. Right. We'll take Hawkeye off. We'll shrink that, and we should get back to our charts. There we go. Just have a look at what else. GBP Aussie. Yes, we'll have another look at GBP Aussie. Any particular time frames there, Ash? So we have it on a daily chart. That 190 level is what we're looking at really. If we switch that to a 15-minute, you'll see we've absolutely obliterated that. That was the trade we're looking at before. If it broke that pivot, then we'll be in on this. This fit with the Hawkeye entry, and we're making. We've had a really nice move on that already. So you see how it works. So this continuation of a trend is really, really important to get a feel for. As I said before. So if we'd so that there was that 190 that we saw as a key level on the daily. So we would have our sort of it would be certainly on our radar. Once we'd seen, we may have actually sort of got into it around here, not been tripped out there. There's the stop. I'd be actually moving this stop up to around about up to an ATR or two below that now. But you'll see how that was red volume right the way through. So if we'd actually entered on this bar here just at around 6 o'clock, then we would have been that's sort of 6 o'clock my time. We would have been quids in with that now. But yeah, there's that continuation of trend, which is really important. What are my thoughts on win? Whoops, sorry, I was a little quick with that. We need to just stick that on a daily chart. That looks like a reversal to me, a trend reversal in progress. If you're in that, and there would have been ample time. There's the green volume coming in. We would have been in on this bar here. There's a sort of double bottom type formation. We'd have been in on this bar here and rode that trend up. Would be profit taken on that pretty quickly. If you're not in it already, where's it today? Let's have a quick look. WYNN, Win Resorts. Up 28 today, so around 83.55 at the moment. Look, if you weren't out of it yesterday, if it sorry, 80.57 at the moment. So it is up slightly. Any further drop in that, I would probably not be very happy about staying in it if I was in it already. If I wasn't, you'd be brave to get in on that again. Certainly wouldn't be a Hawkeye entry. Euro GDP, you on a 4 hour for sure. I'll just change that to 240 minute. Let's put some more bars on this. Apologies for that. Oh, I think I overcooked it on the number of days to load, sorry. There we go. So look on the 4 hourly chart. So if we're going to do that, then we'll be doing 480 on this. So if we're in this already, if we're in the short already, we'd be probably quite happy to see it. There's a pivot low we've had formed at around about 77.10. We'd like to see it close below that to confirm that we're going to go down from here. Hector, if that helps. Al, I'm delighted that that's the fastest 50 pips you've ever made on that GBP Aussie dollar. Great job, mate. Fantastic. Let's just check this short term. Is it? Yeah, there's the euro jumping against. If you look at the tighter time frames, so you can obviously see the new uptrend on the 15-minute. Let's do. There we go. That's 15.30 and 60. Let's just move your questions out of the way. So let's see if this would have been a Hawkeye entry. Well, it wouldn't have been, simply because we haven't got green volume on the 60-minute. So we have got uptrend here on the break of that. So we would not have entered on the basis of this being in conjunction with green volume. That would have been enough with possibly a lower lot size, but no movement on that. Look, I would be very careful coming up to I'll be very careful coming up to the all inventory data at 10:30. I think most things are gonna move and groove at that stage. Let's have a look at USD, which we haven't had a look at yet. While that's cooking, let me just see what the markets are doing as a whole for you. Utilities, XRU are still holding up well. Corning's 22 cents up. Facebook's now moved positive, up now 0.4%. It was down 0.4% when we had a look at it earlier. All the major indices are back in positive territory, but certainly nowhere near the highs. 1983 on the S&P 500 at the moment. So look there, we've got a great example of a Y bar break on the. So this, looking at these three time frames as a potential entry. So we've got another Hawkeye entry here. There's the white bar. We wouldn't be interested in entering unless there was a close on the bar above that. So we are actually on this bar. If this holds, then we are actually moving into uptrend with green volume on the previous bar, potential probably green volume on this bar. So if it finishes in the top third of this bar at the end of 15 minutes, which is pretty soon, then that would be a tick there. If we look on the 30-minute chart, we've got exactly the same picture. That's green volume on there. We've got green volume on the 60. So that would be a Hawkeye entry, dependent on what happens to that in the next few minutes. 75.05. Let's just have another look at it. There we go. So we'll be in on that. No, we actually wouldn't. It didn't finish in the top third of the bar, which would be our preference. If we did get in that, then we'll be okay. Then we'll be okay. So that might have been a Hawkeye entry there across those 3 time frames. But you see, if we hadn't got in it right at the end of that bar, which we're looking at there, but we've popped up a couple of pips in the first minute, so there looks as though there's some buying going on. We'd prefer to see a green bar on this to feel comfortable about it. Hawkeye stop at 74.68 on that, but you see that green trend has gone on that, and that's why you wait for the full bar. So that's that wouldn't have been the best entry on the planet. Yeah, for sure. Look, I'll show you the link if you're interested. Let's just do it from here. Oops. So that's the link if you're not part of the volume package already and you want to do it for $97, not $360. HawkeyeTraders.com/starter. You can obviously pop along to these webinars whenever you want. So that's just to avail yourself of that. If you like the idea of a $9 trial for a month of options trade alerts, then what I'll do is I'll just quickly I'll put that other link on the bottom there so you've got it as well. Give me a second. And then we'll have a look at the markets as the all inventory data is about to come out. Okay, so there I go. I'll put the link on top there, the HawkeyeTraders.com/options. You click on any of those videos, it'll take you to a transcript explaining the whys and wherefores. You can watch the video, and I think there's a link there if you want the $9 trial for a month of the options trade alert portfolio service. Just because there's been a couple of questions on that already. Is volume the same as looking at order flow? Yeah, I guess it is. I guess it's looking at the same concept of it's looking at the same concept as supply and demand. Whether you have a system that actually sort of trades that or not, it's not. I'm not aware of any order flow indicator that I've used in the past. But look, orders are determined by supply and demand, which is exactly the same principles on which volume is based. Volume is probably a slightly purer measure, perhaps. Okay, so let me know if audio's back. What's the training program for Hawkeye? Good question, Carl. Look, there's in the members area, which you also get access to for that $97, there's massive videos on how to use it. There's technical support there if you need it. There's once you sign up, you get emails on how to install it. As you sign up, you choose what you're going to add it to. And once you've done that, then it triggers a series of emails, depending on whether you're attaching it to TradeStation or Ninja or MT4. But there's lots of videos, and there's a traders chat room as well in there. Between Ninja and TradeStation, which one's the better scanning filter ability and also gives alert by email and audio? Right. You'd probably get different answers depending on who you asked on that. I certainly, from a scanning point of view, there's radar screen for TradeStation, and there's market analyzer for Ninja. And providing you set both of them up right, then they're both very good. If you're using Hawkeye indicators, you can program both on there. I've got 180 optionable stocks on my scanner for Ninja, so I'll usually set that running as one of the first jobs. Go and make myself a cup of coffee, say good night to the kids and my time, and then come back and have a look before the market opens. So for forex, you can do exactly the same. Actually, yeah, you can forex. I wouldn't. TradeStation going through all sorts of forex dramas at the moment. So forex and TradeStation aren't sitting well together for now. So their forex data, I'm not fully aware because I don't use TradeStation for forex, but certainly Nigel does and has done, and many of the traders internationally have used TradeStation for forex. They've all been switched to Asanda accounts, I think. So the data features still work fine, but again, radar screen and Ninja are both perfectly capable of scanning for trades. You can put in as many time frames as you want. So for shorter term traders, I know they usually put 4 time frames in. So they'll have the 15, 30, 60 and 120, for example, so that they can look at the 3 time frames of choice. If you're a longer term trader than that, let's say you were trading a 2-hour, 4-hour, 8-hour chart as your time frames, then again, it could cope with that pretty easily. Yeah, look, Jordan, I know it's been shocking. Yes, I do use Ninja for stock. I actually don't trade. I don't trade anything through Ninja itself. I use Options Express for my options and stocks, and I've got an interactive broker account as well. Yeah, Jordan, the whole thing with TradeStation's been a complete mess. It's been a shocker. And part of the problem is, as you've suggested, really that there hasn't been a clear and helpful way forward to help people along. Think or swim. There's a lot of people using Hawkeye trade with Think or Swim. Again, from an options point of view, particularly that I know of, and stocks. Usually, when they use Think or Swim, they would use Ninja for data. If they're in many cases, end of day data is fine. I mean, from my point of view, most of my decisions are made out of market, so I'll have already reset stops and profit targets, etc., before the market opens, along with a time condition. I'm sure you can do that on Thinkorswim. You can do it conditionally for time as well if you choose to. So if I choose not to watch it live because it's 3 o'clock in the morning, my end, then I've got a trade in there that will trigger. Yes, you can use it to scan stock as well. You put in the parameters you want, Hector, and excuse me, and Ninja's perfectly capable of scanning for stock. Because really, bottom line is that many option traders, including myself, use the underlying equity rather than the options price to determine entry and exit points. So we would use, just to give you the process if that would be useful, so we'd usually use the SPY and the VIX and generally sort of what's coming up in the market to determine strategy choice. And those of you who do trade options, in fact those of you who trade anything, I would say when we talk strategy for options, we're talking the different types of option strategies. When we're talking FX or futures, we're talking different time frames. You should have clear market guidance for that'll help you with your strategy choice. For example, if we saw red trend on the daily chart in the SPY, we see a green trend on the daily, a red trend on the weekly. We'd be more cautious with that, and a pivot high at 2000. We'd be cautious with that with position size lower, and vice versa, of course. If we saw a red trend and there was a green trend or a white trend on the weekly, we may position size lower going down as well. Those option traders that I've coached over the years on a one-to-one basis, those that have really nailed it, I would say the top 20% of option traders have a system in place for selecting strategy as their first thing they have a look at. So pick your strategy first based on the overall market conditions, then you move to stock choice. This idea of one strategy fits all is a complete bloody nonsense, if you'll excuse me. These guys who pump out weekly credit spreads as the only way to go, it's just complete rubbish. And because there are market conditions which aren't suitable for credit spreads, low volatility markets are dreadful for credit spreads. You've got to put them too close, the risks are too high. There's these bunch of guys who I do actually respect them generally, but they do that, and they had 2 trades went wrong and it wiped out 4 months of profit really because they didn't have a solid exit strategy in place. So there isn't an easy way to make money. You've got to learn a multitude of strategies. You wouldn't go on a golf course with one club, so why would you expect to do well in the markets with one strategy? It's just nonsense. There we go. There's Mike on his soapbox about strategies. And look, I can say exactly the same for you guys who trade forex and futures as your major trading vehicle. I do trade forex sometimes, but those of you who do, again, I'm not convinced there's one time frame fits all. I think you need to work hard on developing a system that's right for you, that says this is the right set of time frames for this particular set of market conditions. Okay, so we're coming up to the oil inventory data release. We're still pretty, still as we were really. Yeah, we're still about 0.3%. I'm just going to check something for you as well. I've got a couple of queries. apologies on the actual link to subscribe to the free daily videos. Okay, looking at the oil inventories, then where are we at now? So waiting to see. Oh dear, we're running low on battery. That's fun. We've sort of got on later than we, a bit later than we expected, but I wanted to see what the initial response was. Okay, we've got USO spiking. We're now at $10. It's up 3.5%. Wow. That's pretty interesting. A quick look at the SPY, see if the SPY's moving. Yeah, SPY's jumped 0.2% in the last minute. So that could be the thing that, to answer the question that was here before, are we going to test 2,000? Well, look, we may well do. Let's just have a quick. Oops. Sorry, I'm just trying to open these Ninja charts again. Let's just refresh the data on this. Sorry, it's a bit slow. I'm really struggling with struggling a little bit with bandwidth right now. But we get in there. Not much there. Let's have a look at the ES. You should see a that's not going to let me do that. Yeah, S&P 500 is okay. So crude oil stockpiles rose by 3.9 million barrels, which is really matched expectations. So we're responding. The ES isn't doing well on that at all, on that news at all. It's interesting. But you'll see the volatility that it's created, for sure. Yeah, just dropping off a little bit, back down to 0.36% on the S&P 500. So not a huge response at this stage for that. Okay. So is there any more questions, guys? I'm very conscious of time. We've been going for some time. There's the links for the HawkeyeOptions.com. Have a look at the videos. There's a $9 access to the month for a month. Normally $97 a month subscription. If you're interested in the volume module, it's HawkeyeTraders.com/starter. Hector, thanks very much for your good wishes. You're very welcome, mate. It's been a pleasure to have you here. You're very welcome, Al. It's been congratulations on your 50 pip trade. Awesome stuff, mate. Okay, guys. Well, look, it looks as though we've completed all the questions. Rumiguru, thank you. Thank you again. You're always welcome. You always participate really well. It's really, really appreciated, mate. All of you today have been fantastic. I've really appreciated the quality and the breadth of questions. I hope it's been interesting, useful to have a look at things through some Hawkeye eyes. There's been a couple of nice moves on the market as a whole. So trust we'll see you sometime soon. And for those of you taking the leap into Hawkeye options, I'll see you on the other side. For those of you who are going to take advantage of the volume indicator, which is the /starter, expect once you've completed that, then expect the email, the sort of explanatory emails to get you started, to download it and take it from there. Irina, fantastic. Thank you. Great that you got something from it. And great to see you here, of course. Okay, ladies and gents, well, look, I'll say good night to those of you on this side of the world. Have an awesome day on the US side of things. I trust the markets will treat you well. I hope that you've got other things important in your world as well that treat you well today as well. So take care, good luck, trade safe, and of course, trade with passion and learn with passion, because it'll always make a difference to your end results. My name is Mike Smith. I'll catch you again soon. Bye, William. Thank you very much, and good luck, mate. Cheers for coming on today.